Hello traders, Gary Wagner here, just before 11:30 in Honolulu, 5:30 in New York, on Thursday, the 19th day of June, 2014, and this is the daily report for gold and silver. And what a day we are seeing in the market. Tremendous rise across the board. Precious metals markets trading higher. Equities markets actually following through and closing on the upside. Crude oil trading higher, but let's get to the story of the day, gold. Gold just literally breaking out of this most recent correction, this corrective action we saw, in which we saw the market hit about 1286 and then come down to about, I think it was 1261, right in there. We talked about the fact that I really couldn't get bullish unless this market genuinely broke through 1286. And I'm going to talk about why that was such an important number. When it did break through, it broke through with a vengeance, as you can see. Current print 1319.20. Puts it up about $42, $43 on the day. Now the high, $13.22. That's correct, $13.22 on the high. Low, $12.76.10. And as I said, currently up about $43. Of course, we sent out a special trade alert recommending our clients get long gold, get long silver. We'll talk about silver in a second. But in terms of gold, we sent that out. Market was trading fast and furious, but we got that out when we were roughly at 1301, 1302. You might have gotten in at 1303, 1304, maybe even 1305, but the market is trading substantially higher at this point. We'll talk about our strategy in terms of exits, targets that I'm looking for, all on today's show. Silver, an absolute dramatic breakout also, and it actually, in terms of percentage gains, of course, it closed up almost 4.5%, 4.30%. Current print 2070. It's had a high just below, actually just above 2103. This is according to Kitco. Low 1978. Currently, it's trading around 2070, and that's putting it up roughly 86 cents on the day. More on silver at the end of the show. So traders, we have a lot to cover, so let's get right to it. We're looking at a 120-minute chart, and I want to talk to you a little bit about what impetus caused this trigger today. If you think we got in too late, we are market technicians. I've got to see that market move above certain levels before I feel comfortable. But here's what we're looking at. Japanese average chart, but we're really looking at key levels when we look at this particular chart. And the first thing, of course, is we talked about the 50% retracement, 1288, 1286. We really needed to see the market genuinely break above that. And that's this area right in here. Let me highlight that in green. The second thing that I was looking at is if we look at these particular tops, and this is where we had a series of lower highs, pretty much a flat bottom, lower highs, very similar actually to what we got after the market hit its record top at 1900, and then we got these tops at 1800. So we had strong support here. When we broke, you can see we broke genuinely hard. We went down, created this low right in here at about 1240, but my sense was that as long as it stayed above 1240 but below, call it 1286, my sense was we really needed to see the market break above this particular point. Now realize we got into a trade at roughly 1253. Some traders got out at 1283. Some got out lower depending on the strategy that you took, but we were flat, and we were only flat for a couple of days. What happened was as follows. As this market broke out this morning, I saw a significant rise in the market, but what I really didn't want to get involved with was if it was going to hit 1300 and just come barreling back, because 1300 is such a key level in the market. I sent out our first notification this morning. The market was trading roughly at 1298, 1299, 1300 per ounce, and I said as long as it holds above this particular point, we would go ahead and take a stab and actually enter the market from the long side. Well, the market did appear as though it was forming a base, and it started to make new highs. It came back down a little bit. We flashed out a trade alert. As I said, the market was trading roughly 1301, 1302. You got in into the low 13s. The point was that we saw this market really barrel through a couple of different levels. Key levels of resistance that it broke through, here's 1300 right in here. And there's no doubt you can see that we had these series of tops right here. The next real level was right up here, which was about 1308. And then another one at about 1311. 1311, of course, being a 38% retracement. And it's really a retracement that we want to look at because it's really from the top all the way to the lows here. And so it's a fairly significant point. There's a couple other retracements that we're going to look at, and we'll do that tomorrow. But the key was that as I saw it forming a base and it looked as though it was going to trade higher, we signaled a buy trigger. Traders that took the call, as they said, you're in anywhere between 1302, 1303. Now, what are we looking at for particular strategies? Now, the key right now is going to see how it forms in terms of a base. We're trading roughly at 1318. We haven't seen the market really come down. The critical level, as far as I'm concerned right now, that I'd like to see it hold is 1311. The absolute line in the sand that we really don't want to see any kind of a breach because of the importance of the psychological number is 1300. So we have 1300, 1311. That's what I'm looking at as current support. Current resistance. Well, we have a couple of different points of resistance. If we look at this particular top here and we carry our line across, I'm going to carry it as straight as I can. I believe that this was 1331. So 1331 is our first level, and then 1341. Depending on, let's assume that the market does continue to rise, depending on how it reacts at this particular point, if it can barrel through 1331, our real next level of resistance is 1341. Those are my absolute minimums in terms of my exit targets. I would, if the market in fact continues to rise higher, we're in roughly 1300. I'd like to at least get $40 out of the trade. However, we're going to see how the market reacts, because the one thing I've talked about before, parabolic up also means parabolic down, and we want to absolutely be sensitive to that. But the key right now is that we've had a genuine break and a break to the upside. So another way to look at it, of course, is on a daily chart. That's what I've pulled up. This is standard candlestick format. There's absolutely no doubt. Look at the dynamics of this particular spike up. $40 plus day. We haven't seen that in the longest while. As I look at this chart, we don't see any kind of candle that has this kind of size and momentum. I really believe that once we broke above this 1386 to 1388 level, and especially these bottoms right in here, I'm going to try to carry it across as straight as I can. Once we broke above that, we were off to the races, traders. And you can see that the market just barreled and barreled on impeccably and with a lot of momentum. And so my sense is that we will probably see this market pick up some steam. And I think that this rally is absolutely underway, but I think that there's more in store on the upside. Now, traders, we have been talking about this all week, actually all of last week. The key that we're witnessing, this is on a weekly chart, and that's what makes us so strong. If we look at the last month of trading, that's this red candle, this star, this green candle, our Three River Morning Star right here. And then this week, even though it's Thursday, as long as we don't have a dramatic move down, we've got a tremendous confirming candle. Very, very similar to what we saw here. Not the confirming candle, because that was nowhere near the strength that we're seeing right now, but the fact that we had that Three River Morning Star variation. The last time we saw this variation, the market rallied about $200. Now, what do I think we could see now? I think that even if we're looking at a rally equivalent in terms of just amplitude, meaning price move, we're starting here at about 1240. 1340, 1440. I have some charts and some studies that are showing me we could see the market move as high as 1440. That's our absolute top view of where we could see the market going. And in terms of the minimum move that I'm expecting is about 1340, and that's based upon Fibonacci retracement studies. This 1440 is also based on Fib retracements, but it's a much longer study. We don't have the time today. We'll absolutely cover that on tomorrow's show. not to be outdone by the big brother, that precious yellow metal, is silver. Silver really spiked up. We also took positions in this market. I'm not sure where we got in, but we got in roughly in this area. I think it was around 2060. I'll have to check. But in terms of upper level targets, we have 21. That's our first level of real resistance. And if you recall from the last couple of weeks, I talked about the potential of silver going to $22. Now, when I said that, silver was sitting at around 1940. It was this particular spike right in here, I believe, that is when we talked about it. But the fact is, we saw it trade sideways. We saw this dramatic 4% plus day in the market. We are just under $21. We will talk about specific support and resistance levels in silver on tomorrow's show. This has been an exciting day. Maintain your long gold position, maintain long silver positions. We will talk about where we want to move stops to next week a little bit on tomorrow's show on the weekly wrap-up. What a day we've seen in the market. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Friday for the weekly wrap-up. Bye-bye.